Imagine waking up tomorrow and finding out that every dollar in your wallet, every cent in your bank account, has been converted into digital currency controlled entirely by the government. No more cash under your mattress, no more anonymous transactions at the farmer's market. Every purchase you make, every dollar you spend, tracked and recorded in real time. Sound like science fiction? It's closer than you think. The digital dollar isn't just coming, it's already being tested. And whether you're ready or not, it could fundamentally change your relationship with money forever. The question isn't if it will happen, but what it means for you. The conversation about money is changing faster than most people realize. For centuries, we've relied on physical currency, coins you could hold, bills you could fold, money that existed in the tangible world. But that era is ending. Central banks around the world, including the Federal Reserve, are now seriously exploring the creation of central bank digital currencies, or CBDCs. In the United States, this would mean the introduction of a digital dollar, a completely electronic form of money issued directly by the government. This isn't about credit cards or PayPal. Those are just ways to transfer existing dollars. A digital dollar would be something entirely different, a new form of money that exists only in digital form, managed and monitored by the central bank itself. Proponents argue it could revolutionize how we handle money, making transactions instantaneous, reducing costs, and bringing financial services to millions of unbanked Americans. Critics, however, warn of unprecedented government surveillance, the erosion of privacy, and a level of financial control that would have seemed impossible just a generation ago. The truth is, whether this excites you or terrifies you, the digital dollar conversation is no longer hypothetical. Pilot programs are running, research is being conducted, and policymakers are making decisions that will affect every American's financial future. Today, we're going to cut through the hype and the fear to understand what a digital dollar really is, how it would actually work, and most importantly, what it could mean for your money, your privacy, and your freedom. Before we dive deeper into this topic, I want to hear from you. What's your take on a government-issued digital dollar? Does it sound like progress or does it concern you? Drop your thoughts in the comments below. I read every single one, and your perspective matters in this conversation. And if you're finding this information valuable, hit that like button and subscribe to the channel so you don't miss our upcoming videos, where we'll continue exploring how technology is reshaping our financial future. Now, let's get into the details. Understanding what a digital dollar actually is. To understand what's really at stake with a digital dollar, we first need to be crystal clear about what we're actually talking about, because there's a lot of confusion out there. When people hear digital dollar, many immediately think of the money in their bank account that they access through an app, or they think of cryptocurrencies like Bitcoin. But a central bank digital currency is fundamentally different from both of these things, and understanding that difference is crucial. The money in your bank account right now is already digital in the sense that it's just numbers on a screen. But technically, those dollars belong to the bank, not to you directly. When you deposit money, you're essentially lending it to the bank, and the bank owes you that amount. The bank then uses your deposits to make loans and conduct other business. This is why banks can fail, why there are FDIC insurance limits, and why during a crisis, you might not be able to access all your money immediately. Your checking account balance is a liability on the bank's books, not actual currency you possess. Cryptocurrencies like Bitcoin represent the opposite extreme. They're completely decentralized, meaning no government or central authority controls them. Bitcoin operates on a distributed network, where transactions are verified by thousands of computers around the world, and the supply is limited by mathematical algorithms. This decentralization is precisely what makes cryptocurrencies attractive to some people and concerning to governments. No single entity can control, regulate, or shut down Bitcoin, which means it operates outside the traditional financial system entirely. A digital dollar would be something in between, but much closer to cash than to either of these options. It would be a direct liability of the Federal Reserve, just like the physical bills in your wallet are right now. When you hold a $20 bill, that's a direct claim on the US government. A digital dollar would work the same way, except it would exist only as an electronic entry in a digital wallet or account, either directly with the Federal Reserve or through authorized intermediaries like banks. This might sound like a subtle distinction, but it's actually profound. Right now, only banks can hold accounts directly with the Federal Reserve through what are called reserve accounts. Regular people and businesses can't do this. We have to go through commercial banks to access the monetary system. A digital dollar could potentially change that, allowing individuals to hold what amounts to a Federal Reserve account on their smartphone. Your digital wallet wouldn't contain a balance that represents money your bank owes you. It would contain actual central bank money, just in digital form. The technology behind a digital dollar could take several forms. The Federal Reserve has been researching different models, including one based on distributed ledger technology similar to what cryptocurrencies use, but centralized and controlled by the central bank. Another model would work more like the current electronic payment systems, just with direct central bank involvement. The exact technical implementation matters less than the fundamental concept. This would be government-issued, government-controlled digital currency with the full backing and authority of the United States behind it. It's also important to understand what a digital dollar would not be. It wouldn't be a cryptocurrency in any meaningful sense of the word. There would be no mining, no blockchain in the decentralized sense, no limited supply based on algorithms. The Federal Reserve would issue digital dollars just as it currently issues physical dollars, with complete control over the money supply. It wouldn't be anonymous like cash currently is, and it wouldn't operate independently of government oversight. In fact, it would likely give the government far more visibility into financial transactions than it currently has. Some countries are already testing or implementing their own versions of CBDCs. China has been piloting the digital yuan in several cities, allowing millions of people to use it for everyday transactions. The Bahamas launched the sand dollar, and countries from Sweden to India are conducting their own research and pilots. The United States has been more cautious, with the Federal Reserve carefully studying the implications before making any commitments, but the direction of travel is clear. The question is no longer whether digital currencies issued by central banks will exist, but rather when they'll become widespread and what form they'll take. The potential benefits and promises of a digital dollar. Proponents of a digital dollar make compelling arguments about why this transformation could benefit society, the economy, and individual Americans. To have an honest conversation about CBDCs, we need to understand these potential advantages, even if we ultimately decide the risks outweigh them. The Federal Reserve and other advocates aren't proposing this change arbitrarily. They see genuine problems with the current system that a digital dollar might solve. The most immediate and tangible benefit would be transaction speed and efficiency. Right now, moving money through the banking system can be surprisingly slow and expensive, especially for cross-border transactions. If you send money internationally, it might take several days to arrive, pass through multiple intermediary banks, and incur significant fees along the way. Even domestic transfers can take time to settle, which is why when you deposit a check, the funds aren't immediately available. A digital dollar could make transactions instantaneous and nearly free, settling in seconds rather than days. This would be particularly valuable for people who live paycheck to paycheck and can't afford to have money tied up in transit, or for small businesses that need to manage cash flow carefully. Financial inclusion represents another major argument in favor of a digital dollar. Today, millions of Americans remain unbanked or underbanked, meaning they don't have access to traditional banking services or rely on expensive alternatives like check cashing services and payday lenders. According to the FDIC, about 5% of U.S. households don't have a bank account at all. These individuals often pay exorbitant fees just to access their own money. If the government provided a basic digital wallet as part of a CBDC system, potentially even through post offices or other public infrastructure, it could give everyone access to safe, low-cost financial services without requiring a traditional bank account. This could be transformative for people in rural areas, low-income communities, or anyone who has been excluded from the banking system due to credit history, documentation issues, or other barriers. The efficiency of government payments would also improve dramatically. Think about the stimulus checks distributed during the pandemic. Those who had direct deposit received their money quickly, but millions of Americans waited weeks or even months for paper checks to arrive in the mail. Some checks were lost, stolen, or sent to wrong addresses. With a digital dollar, the government could distribute emergency funds, tax refunds, Social Security payments, and other benefits instantly to every American's digital wallet. This wouldn't just be more convenient. In times of crisis, it could be the difference between families having food on the table or not. From an economic policy perspective, a digital dollar could give the Federal Reserve new tools to manage the economy. Currently, the Fed influences the economy primarily through interest rates and by buying or selling securities to banks. These mechanisms are indirect and can be slow to affect ordinary people. With a CBDC, the central bank could theoretically implement monetary policy more directly and precisely. They could, for example, provide stimulus by directly crediting people's digital wallets, or they could implement negative interest rates more effectively if necessary during a severe recession. This direct connection between the central bank and the public could make economic interventions faster and more targeted. The fight against financial crime is another argument supporters make. Money laundering, tax evasion, terrorism financing, and other illicit activities often rely on the anonymity of cash and the gaps in the current financial system. A digital dollar would create a comprehensive record of transactions, making it much harder for criminals to move money undetected. Law enforcement could track illegal financial flows more effectively, and the government could ensure that tax obligations are properly met. For those who have nothing to hide, this might seem like an entirely reasonable trade-off. There's also the matter of maintaining monetary sovereignty in an increasingly digital world. As cryptocurrencies and private digital currencies like Facebook's proposed Diem have emerged, central banks have become concerned about losing control over their national currencies. If people start using private digital currencies for everyday transactions, it could undermine the government's ability to manage the economy and maintain financial stability. A digital dollar would ensure that the United States maintains control over its currency in the digital age, rather than ceding that control to private companies or decentralized networks that answer to no government. These arguments aren't trivial, and they reflect real problems with the current system. The question is whether the solutions a digital dollar provides are worth the potential costs and risks, which brings us to the concerns that make many people deeply uncomfortable with this entire concept. The privacy concerns and potential for government overreach. For all the potential benefits, the concerns surrounding a digital dollar are profound and touch on fundamental questions about freedom, privacy, and the relationship between citizens and their government. These aren't paranoid fantasies or conspiracy theories. They're serious issues that even supporters of CBDCs acknowledge need to be carefully addressed, though critics argue they may be fundamentally unresolvable within a CBDC framework. The most obvious concern is privacy. Cash is anonymous. When you buy a cup of coffee with a $20 bill, there's no permanent record of that transaction tied to your identity. The government doesn't know you bought coffee, where you bought it, or what time of day you purchased it. This anonymity is a feature, not a bug. It protects ordinary privacy in everyday life. A digital dollar, by its very nature, creates a record of every transaction. Unless specifically designed otherwise, the government would have the technical capability to see every purchase you make, every donation you give, every financial interaction you have with another person. This level of surveillance would be unprecedented in American history. Proponents argue that privacy protections could be built into a digital dollar system, perhaps limiting the government's access to transaction data or requiring warrants for surveillance. But this raises a fundamental question. Why should we trust that these protections will be maintained? History shows that once surveillance infrastructure exists, it tends to be used far more broadly than initially promised. The Patriot Act, passed with specific terrorism-related justifications, has been used to investigate ordinary crimes that have nothing to do with national security. The NSA's surveillance capabilities, built for foreign intelligence, were used to collect data on millions of Americans. If the infrastructure exists to monitor every financial transaction in real time, can we really trust that it won't eventually be used for purposes far beyond what's currently being discussed? Beyond privacy, there's the potential for financial control. In a fully digital system where all money exists only in government-controlled accounts, the government would have unprecedented power over individuals' finances. They could freeze your account instantly without going through any judicial process. They could program money to be usable only for certain purposes or at certain businesses. They could implement expiration dates on currency, forcing people to spend within certain timeframes. They could prevent you from sending money to organizations or causes they disapprove of. In China, which is furthest along in CBDC implementation, there are already concerns that the digital yuan could be used as part of the social credit system, restricting financial access for people who fall out of favor with the government. You might think this couldn't happen in America, that our constitutional protections and democratic institutions would prevent such abuse. But consider how financial restrictions are already used as political weapons. After the Canadian trucker protests, the Canadian government used emergency powers to freeze the bank accounts of protesters and even people who donated to them, without any criminal charges or judicial review. This happened in a Western democracy with strong rule of law traditions. If the government can freeze your digital wallet with the click of a button, your financial freedom exists only at their discretion. There's also the question of what happens to vulnerable populations in a surveillance economy. Domestic violence victims often need to make financial transactions that their abusers can't track. Political dissidents might need to support causes their government opposes. Whistleblowers might need to receive payments without revealing their identity. People dealing with stigmatized issues, whether medical conditions, addiction recovery, or anything else, currently have the protection of financial privacy. A digital dollar could eliminate these protections, creating what some critics call a panopticon economy, where everyone knows they're being watched all the time. The chilling effect of this surveillance could change behavior in subtle but important ways. If you know every purchase is being recorded and potentially analyzed, you might self-censor, avoiding certain books, political donations, or associations just to stay off any potential watch list. This isn't freedom. It's conformity enforced through surveillance, even if no one is explicitly telling you what to do. The knowledge of being watched is itself a form of control. Perhaps most troubling is that once we transition to a fully digital dollar and eliminate physical cash, there would be no going back. If you don't like how the system is being used, if the government begins abusing its power, there would be no alternative. You couldn't opt out. You couldn't use cash instead. Your ability to participate in the economy would be entirely dependent on staying in the government's good graces. The practical implications for your daily life and financial future. Beyond the big philosophical questions about privacy and freedom, a digital dollar would have concrete, practical effects on how you manage money day to day. These practical considerations might actually matter more to most people than the abstract political concerns, even though both are important. Understanding how your financial life would actually change can help you think more clearly about whether this transformation is something you support or oppose. Banking as we know it would likely change dramatically. Right now, commercial banks serve as intermediaries between you and the Federal Reserve. They take deposits, make loans, and provide various financial services. If people could hold accounts directly with the central bank through a CBDC system, why would they keep money in commercial banks? Banks might face massive outflows of deposits as people move money to what they perceive as the safer, more direct option of a digital dollar wallet. This could destabilize the banking system unless carefully managed. The Federal Reserve has acknowledged this concern and suggested that a digital dollar might need to work through banks rather than replacing them, but the details of how this would work remain unclear. Your relationship with loans and credit could also shift. Banks make money partly through the spread between what they pay depositors and what they charge borrowers. If deposits leave the banking system, banks would have less money to lend, potentially making loans more expensive or harder to obtain. The government might need to step in to provide credit directly, fundamentally changing the nature of lending in America. Alternatively, banks might need to offer much higher interest rates to keep deposits, which would increase borrowing costs throughout the economy. Either way, getting a mortgage, car loan, or business loan could become more complicated and expensive. For everyday transactions, the changes would be mixed. Payments would likely become faster and cheaper, which is genuinely positive. You could send money to anyone instantly without fees, split bills seamlessly, and never worry about whether a payment will clear. But you'd also lose the ability to make anonymous purchases. Everything would create a data trail. For some purchases, this might not matter at all. For others, ranging from political donations to medical purchases to birthday gifts you want to keep secret, the loss of privacy could be significant. International travel and commerce would be simplified in some ways but complicated in others. Converting currencies could become easier and cheaper, and you might not need to worry about carrying foreign cash or finding ATMs abroad, but you'd also be entirely dependent on having electronic access to your funds. If you lose your phone, if the system goes down, or if there's any technical problem, you could find yourself unable to access money in a foreign country with no backup option. And of course, every cross-border transaction would create a record that multiple governments could potentially access. The shift to a digital dollar would also create new vulnerabilities. Cybersecurity would become even more critical than it already is. A cyber attack on the CBDC system could freeze the entire economy. Individual security would matter more too. If someone steals your phone or hacks your account, they could instantly drain your funds. And unlike credit card fraud where you have significant protections, recovering stolen digital currency could be much harder. You'd need to be much more careful about digital security than most people currently are. For older Americans and those less comfortable with technology, the transition could be particularly challenging. Not everyone has a smartphone or feels comfortable managing money digitally. The digital divide isn't just about access to technology, it's about comfort and competence with using it. A system that seems simple to a tech-savvy 25-year-old might be overwhelming to an 80-year-old who has used cash their entire life. Unless carefully designed with these users in mind, a digital dollar could create new forms of exclusion even as it attempts to improve financial inclusion. Perhaps most importantly, you'd need to think about financial resilience differently. Right now, keeping some cash at home provides a backup if banks fail, if systems go down, or if you need privacy for any reason. In a digital-only system, you'd be entirely dependent on the electronic infrastructure working properly and the government maintaining access to your funds. This might be fine most of the time, but in crisis situations, having no alternative could leave you vulnerable. The question each person needs to ask is whether the convenience and efficiency of a digital dollar is worth giving up the autonomy and resilience that physical cash provides. This isn't a question with one right answer, but it's one that will affect every American if this transformation moves forward.